Question 1. Risk classification and underwriting. Which of the following factors is typically used to classify an applicant as substandard in property insurance underwriting? A. The applicant's history of frequent claims. B. The applicant's credit score. C. The location of the property in a low-risk area. D. The applicant's occupation as firefighter. Answer A. The applicant's history of frequent claims. Explanation. In property insurance underwriting, substandard refers to applicants who present higher than average risk, often due to factors like frequent claims history, poor maintenance records, or the property's location in a high-risk area. E.g., prone to natural disasters. Frequent claims are a strong indicator that the applicant may continue to incur losses, making them a higher risk for insurers. A low credit score, option B, or a risk-free occupation, option D, may not automatically classify the applicant as substandard unless they directly correlate with riskier behaviors. A property in a low-risk area would likely be considered for a standard classification. Question 2. Underwriting process. Which of the following is the primary purpose of conducting a risk assessment during the underwriting process? A. To determine the premium amount based on the applicant's age. B. To assess the applicant's financial stability and eligibility. C. To determine if an applicant is eligible for the maximum coverage. D. To eliminate applicants from being insured. Answer B. To assess the applicant's financial stability and eligibility. Explanation. The primary purpose of risk assessment in underwriting is to evaluate an applicant's financial stability and risk exposure, ensuring that the insurance company is accepting an applicant who meets its eligibility criteria and will not result in undue losses. This step involves reviewing factors like the applicant's financial health, claims history, and the specific associated with the applicant's property or personal circumstances. Option is related to premium rating but does not fully reflect the purpose of the risk assessment. Option C is incorrect because risk assessment does not automatically grant maximum coverage, and option D is an extreme interpretation, as risk assessment aims to inform decisions rather than exclude applicants outright. Question 3, scenario-based question. Mr. Williams is applying for a homeowner's insurance policy. He has a history of filing multiple water damage claims on previous properties, and his current home is located in a flood-prone area. Based on these factors, what is most likely the underwriter's decision regarding Mr. Williams' application? A. Mr. Williams will be offered policy with the maximum coverage available. B. Mr. Williams' application will be declined due to high risk. C. Mr. Williams will be offered policy but with higher premiums and certain exclusions. D. Mr. Williams will be required to submit additional medical documents to finalize the application. Answer C. Mr. Williams will be offered a policy but with higher premiums and certain exclusions. Explanation. The underwriter will likely offer Mr. Williams a policy but may impose higher premiums and exclusions related to water damage or flooding due to his history of water damage claims and the location of the home in a flood-prone area. Underwriters take these factors into account when determining risk and setting the terms of coverage. Option B is unlikely because insurers typically do not outright decline applicants based solely on past claims unless the risk is exceptionally high. Option is also unlikely because of the high risk, and option D is not relevant to homeowner insurance underwriting, which does not typically require medical documents unless health coverage is involved. Question 4. Underwriting guidelines. In life insurance underwriting, what is the primary purpose of evaluating an applicant's family medical history? A. To assess the likelihood of the applicant passing a medical exam. B. To determine the applicant's potential for long-term disability. C. To predict the likelihood of the applicant developing serious health conditions. D. To establish the applicant's eligibility for specific type of policy. Answer C. To predict the likelihood of the applicant developing serious health conditions. Explanation. In life insurance underwriting, the family medical history plays a crucial role in predicting an applicant's potential for developing serious health conditions such as heart disease, cancer, or diabetes, which may affect their life expectancy. The underwriter uses this information to assess the applicant's risk level and adjust their policy terms accordingly. Option is incorrect because the medical exam is typically conducted independently of family medical history. Option B is incorrect as disability underwriting is a separate process. Option D may be secondary consideration but is not the primary purpose of evaluating family medical history. Question 5. Risk assessment in property insurance. Which of the following is the most important factor when determining the insurability of a high-value home? A. The homeowner's credit score. B. The market value of the property. C. The presence of security systems and loss prevention measures. D. The applicant's income level. Answer: C. The presence of security systems and loss prevention measures. Explanation: when underwriting high-value properties, the presence of security systems, fire prevention measures, and other loss prevention steps are critical factors. These measures reduce the risk of significant losses, making the property more insurable and potentially lowering the premium. The homeowner's credit score, option A, and income level, option D, may influence the financial stability of the applicant but are not as relevant to the risk posed by the property itself. The market value of the property, option B, may be considered, but it does not account for the risk mitigation factors that directly impact the insurability of the home. Question 6. Health insurance underwriting. Which of the following would most likely lead to a higher premium in individual health insurance underwriting? A. A healthy applicant with no pre-existing conditions. B. An applicant with a history of smoking. C. An applicant with a clean driving record. D. An applicant with a family history of diabetes. Answer: B. An applicant with a history of smoking. Explanation: smoking is a significant factor in health insurance underwriting due to its association with numerous health risks, including heart disease, lung cancer, and respiratory problems. As a result, an applicant with a history of smoking is likely to face higher premiums due to the increased health risks. Option is incorrect because a healthy applicant with no pre-existing conditions would likely be eligible for standard rates. Option C is not a primary factor in health insurance underwriting unless the applicant's driving record is related to an accident history or injuries. Option D may increase premiums but is less directly impactful than a history of smoking. Question 7. Ethical considerations in underwriting. Under which of the following circumstances should an underwriter disclose confidential information about an applicant? A. When requested by a family member of the applicant. B. When required by law or legal authorities. C. When the information may benefit the insurer financially. D. When the applicant has provided consent. Answer: B. When required by law or legal authorities. Explanation: underwriters are bound by confidentiality and privacy laws, and they must only disclose an applicant's information when required by law or authorized by the applicant. If legal authorities request information through subpoena or other legal process, the underwriter must comply, disclosing information for financial benefit to the insurer, option C, or to family member, option, without the applicant's consent is unethical and violates privacy laws. Option D is correct only if the applicant has explicitly provided consent. Otherwise, confidentiality must be maintained. Question 8. Rating and pricing of insurance policies. How does an underwriter typically calculate the premium for a property insurance policy? A. By considering the applicant's credit score and claims history. B. By multiplying the replacement cost of the property by a fixed rate. C. By considering the applicant's income level and risk factors. D. By evaluating the location of the property and the applicant's lifestyle. Answer: B. By multiplying the replacement cost of the property by a fixed rate. Explanation: premiums for property insurance are typically calculated based on the replacement cost of the property, which is multiplied by a rate determined by the insurer. This rate is adjusted based on various risk factors such as location, building materials, and the presence of risk mitigation measures like security systems or fire protection. Option is a factor in risk evaluation but does not directly calculate premiums. Options C and D may influence underwriting decisions but are not the primary basis for premium calculation. Question 9. Underwriting for specific types of insurance. When underwriting auto insurance, which of the following factors is least relevant to determining the applicant's risk? A. The applicant's driving history and traffic violations. B. The age and condition of the vehicle. C. The applicant's profession and daily commute. D. The applicant's credit score. Answer: D. The applicant's credit score. Explanation: while credit scores are often used in underwriting other types of insurance, they are not as significant a factor in auto insurance underwriting. The primary factors for auto insurance underwriting include the applicant's driving history, the condition of the vehicle, and how much the applicant uses the vehicle. E.g., daily commute. Poor credit score may increase premiums in some cases, but it is not directly tied to auto risk as other factors. Option A, B, and C are more directly related to determining auto insurance risk. Question 10. Technology in underwriting. Which of the following technologies is most commonly used in modern insurance underwriting to assess an applicant's risk? A. Blockchain for policy management. B. Artificial intelligence and machine learning for risk analysis. C. Virtual reality for claims inspection. D. Cloud computing for customer service management. Answer B. Artificial intelligence and machine learning for risk analysis. Explanation. Artificial intelligence, AI, and machine learning, ML, are increasingly being used in insurance underwriting to analyze large datasets, identify patterns, and predict risks more accurately. These technologies enable underwriters to make more informed decisions based on predictive modeling, which improves the overall efficiency and accuracy of underwriting. Block. Option A and cloud computing, option D, are more related to policy management and storage but are not specifically used for risk analysis in underwriting. Virtual reality, option C, is used in claims inspections but is not widely employed in underwriting. Question 11. Risk classification. Which of the following best describes the process of risk classification in property insurance underwriting? A. Assigning a risk level based on the applicant's previous claims history. B. Grouping similar risks together and assigning appropriate premium rates. C. Evaluating the applicant's credit score to determine eligibility. D. Considering the applicant's age and income level for rating purposes. Answer B. Grouping similar risks together and assigning appropriate premium rates. Explanation. Risk classification involves grouping applicants with similar risks and determining the appropriate premium rates for each group. Underwriters use factors like location, property type, and claims history to evaluate the overall risk and assign a premium. Option A refers to claims history but is just one part of risk classification. Option C is not typically used in property insurance. Option D, while relevant in other types of insurance, does not play a direct role in property underwriting. Question 12. Catastrophic risk analysis. Which of the following would be considered a catastrophic risk in insurance underwriting? A. Fire damage to a commercial building. B. A minor car accident with limited property damage. C. A large-scale natural disaster like a hurricane or earthquake. D. A theft claim involving a homeowner's property. Answer C. A large-scale natural disaster like a hurricane or earthquake. Explanation. Catastrophic risks involve large-scale events that can cause significant damage across a wide area, such as hurricanes, earthquakes, or floods. These events create a high level of risk for insurers, as they may result in numerous claims within a short period. Option A, B, and D are examples of smaller-scale risks that are less likely to have widespread financial implications. Question 13. Ethical considerations in underwriting. An underwriter discovers that an applicant for a life insurance policy has failed to disclose a significant medical condition. What should the underwriter do? A. Approve the policy as long as the applicant is willing to pay a higher premium. B. Deny the application and inform the applicant of the omission. C. Approve the policy with a rider excluding coverage for the condition. D. Ignore the omission and process the application normally. Answer B. Deny the application and inform the applicant of the omission. Explanation. Ethical standards and regulations require full disclosure from applicants. If an underwriter discovers that a significant medical condition was not disclosed, they should deny the application. Failing to disclose material facts can be considered fraudulent. Option C may be considered in certain cases, but it would require disclosure and negotiation with the applicant. Option is not acceptable, as the failure to disclose the condition would likely constitute a breach of contract. Option D is a violation of ethical standards. Question 14. Arizona insurance regulations. Under Arizona insurance regulations, when must an insurer notify a policyholder of a cancellation or non-renewal of a property insurance policy? A. 15 days prior to cancellation. B. 30 days prior to cancellation. C. 45 days prior to cancellation. D. 60 days prior to cancellation. Answer B. 30 days prior to cancellation. Explanation. According to Arizona state law, insurers are required to notify policyholders of cancellation or non-renewal of a property insurance policy at least 30 days in advance. This gives the policyholder time to make adjustments or find alternative coverage. Options A, C, and D do not comply with the statutory notification period. Question 15. Claims handling. Which of the following is the primary purpose of claims history in underwriting? A. To determine the applicant's eligibility for life insurance coverage. B. To assess the potential for future claims and adjust premiums accordingly. C. To identify whether the applicant has any pre-existing medical conditions. D. To evaluate the applicant's financial stability for credit risk. Answer. B. To assess the potential for future claims and adjust premiums accordingly. Explanation. Claims history is an important factor in underwriting because it helps the underwriter assess the likelihood of future claims. A history of frequent claims can indicate a higher risk, leading to higher premiums or even denial of coverage. Option A relates to life insurance, but claims history in that case would be different. Option C is unrelated to claims history. Option D is related to credit scoring, not claims history. Question 16. Rating factors. Which of the following is least likely to influence the premium for a residential property insurance policy? A. The age and condition of the property. B. The location of the property and surrounding environment. C. The applicant's profession. D. The type of coverage selected. E. G. Replacement cost versus the actual cash value. Answer. C. The applicant's profession. Explanation. The applicant's profession generally does not influence the premium for a residential property insurance policy. Factors such as the property's age, location, and coverage type are far more important in determining the premium. Option C is unrelated to property underwriting, while the other options are all critical underwriting factors. Question 17. Risk-based pricing. Which of the following is a key principle behind risk-based pricing in insurance? A. Offering the same premium rate for all applicants regardless of risk. B. Adjusting premiums according to the level of risk posed by the applicant. C. Standardizing premium rates across all insurance types. D. Determining premiums based on the applicant's geographic location alone. Answer. B. Adjusting premiums according to the level of risk posed by the applicant. Explanation. Risk-based pricing is a key principle in underwriting where the premium is adjusted based on the applicant's risk level. Factors like age, claims history, location, and other individual characteristics are considered when setting premiums. Option A does not reflect the principle of risk-based pricing. Option C and D oversimplify premium calculation, which is based on a variety of risk factors beyond geographic location. Question 18. Consumer protection laws. Under Arizona law, which of the following is a violation of consumer protection regulations in insurance? A. Providing clear and accurate policy documents. B. Offering discounts based on the applicant's claims-free history. C. Discriminating against applicants based on their race, color, or religion. D. Informing policyholders about changes to their coverage terms. Answer. C. Discriminating against applicants based on their race, color, or religion. Explanation. Arizona law prohibits discrimination in underwriting based on race, color, religion, gender, or other protected characteristics. Discriminating against applicants for these reasons is illegal and a violation of consumer protection regulations. Options A, B, and D are legal and acceptable practices under Arizona insurance laws. Question 19. Property insurance underwriting. What is the primary risk factor for insuring a historic property? A. The property's location in a flood zone. B. The applicant's financial stability. C. The replacement cost of the property. D. The condition and preservation of the structure. Answer. D. The condition and preservation of the structure. Explanation. Historic properties often present unique underwriting challenges due to their age and specialized construction. The condition and preservation of the property are crucial in determining insurability, as older buildings may have structural weaknesses or require costly repairs. Options A, B, and C are relevant but secondary to the physical condition of the property. Question 20. Life insurance underwriting. What factor is most critical in underwriting life insurance for an older applicant? A. The applicant's occupation. B. The applicant's credit score. C. The applicant's health history and life expectancy. D. The applicant's marital status. Answer. C. The applicant's health history and life expectancy. Explanation. In life insurance underwriting, the most critical factor for older applicants is their health history and life expectancy. As applicants age, health conditions become more prevalent and life expectancy plays a central role in underwriting decisions. Occupation and credit score may influence certain aspects of underwriting but are less impactful than health history in older applicants. Marital status is typically irrelevant for underwriting life insurance. Question 21. Arizona licensing regulations. In Arizona, an underwriter must notify the Arizona Department of Insurance within how many days of a change in the underwriting department's operations? A. 5 days. B. 10 days. C. 20 days. D. 30 days. Answer: B. 10 days. Explanation: under Arizona regulations, an underwriter must notify the Arizona Department of Insurance within 10 days if there is a significant change in the operations of the underwriting department. This ensures compliance with state laws and maintains the integrity of the insurance process. Question 22. Claims handling procedures. Which of the following steps is typically part of the claims investigation process? A. Adjusting the premium rate based on the claim. B. Verifying the applicant's financial status. C. Gathering evidence and interviewing witnesses. D. Offering immediate compensation to the claimant. Answer: C. Gathering evidence and interviewing witnesses. Explanation: during the claims investigation process, underwriters gather evidence including inspecting the damage, interviewing witnesses, and reviewing the facts. Option and B are not part of the claims investigation itself. Option D may occur after the investigation, but immediate compensation is not always feasible or appropriate before evidence is gathered. Question 23. Policy rescission in health insurance. Under what circumstances can an insurer rescind a health insurance policy in Arizona? A. If the policyholder files a claim within the first 30 days of the policy. B. If the insurer discovers a material misrepresentation by the policyholder. C. If the policyholder requests additional coverage. D. If the policyholder changes jobs. Answer: B. If the insurer discovers a material misrepresentation by the policyholder. Explanation: in Arizona, a health insurance policy can be rescinded if there is evidence of a material misrepresentation by the policyholder during the application process. This means the policyholder provided false or incomplete information that would have impacted the insurer's decision to issue the policy. Question 24. Arizona Insurance Fraud Prevention Regulations. Under Arizona law, what is the primary purpose of the Arizona Fraud Prevention Act? A. To allow insurers to deny coverage for high-risk applicants. B. To prevent agents from selling multiple policies to the same client. C. To reduce fraudulent claims and protect policyholders and insurers. D. To set minimum premium rates for all insurers in the state. Answer: C. To reduce fraudulent claims and protect policyholders and insurers. Explanation: the Arizona Fraud Prevention Act is designed to reduce insurance fraud by investigating and prosecuting fraudulent claims. This law aims to protect both policyholders and insurers by ensuring claims are legitimate. Options A, B, and D do not reflect the purpose of this regulation. Question 25. Reinsurance in underwriting. What is the main reason an insurer may use reinsurance in the underwriting process? A. To increase the premiums for policyholders. B. To limit the insurer's financial exposure to large losses. C. To reduce claims processing times. D. To avoid licensing requirements in certain states. Answer: B. To limit the insurer's financial exposure to large losses. Explanation: reinsurance allows insurers to transfer some of their risk to another insurance company, thereby limiting their financial exposure to large losses. This helps maintain financial stability and ensures that claims can be paid even in catastrophic situations. Options A, C, and D are not valid reasons for using reinsurance. Question 26. Underwriting for flood insurance. In Arizona, which organization administers the majority of flood insurance policies? A. Private insurers. B. The Arizona Department of Insurance. C. The Federal Emergency Management Agency FEMA. D. The National Association of Insurance Commissioners NAIC. Answer: C. The Federal Emergency Management Agency FEMA. Explanation: the majority of flood insurance policies in the United States are administered through FEMA under the National Flood Insurance Program and FIP. Private insurers may service these policies, but the program is federally managed. Options A, B, and D are incorrect. Question 27. Binding authority. What does it mean when an underwriter has binding authority? A. The underwriter can approve claims without consulting the claims department. B. The underwriter can issue a policy that provides immediate coverage. C. The underwriter can cancel policies at any time without notice. D. The underwriter can increase premiums based on market conditions. Answer: B. The underwriter can issue a policy that provides immediate coverage. Explanation. Binding authority means that an underwriter can issue a policy or a binder that provides immediate coverage. This authority is typically granted by the insurer to trusted agents and underwriters. Options A, C, and D do not accurately describe binding authority. Question 20. Property valuation methods. Which property valuation method considers the cost to replace the insured property with a similar new property at current prices? A. Actual cash value (SEV). B. Replacement cost value (RCV). C. Market value. D. Depreciation value. Answer B. Replacement cost value (RCV). Explanation. Replacement cost value (RCV) considers the cost to replace the insured property with a similar new property at current prices without deducting for depreciation. Actual cash value (SEV) factors in depreciation, while market value reflects what a buyer would pay for the property. Depreciation value is not a standard valuation method in property insurance. Question 29. Arizona state-specific regulations. In Arizona, an insurer must provide notice of non-renewal of a personal auto insurance policy at least how many days before the policy's expiration date? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Answer D. 60 days. Explanation. Arizona law requires insurers to provide policyholders with at least 60 days notice before the expiration date if the insurer intends to non-renew personal auto insurance policy. This allows the policyholder sufficient time to find alternative coverage. Options A, B, and C do not meet the statutory requirement. Question 30. Scenario-based question on property insurance. Scenario. Anne owns a home in Arizona and recently installed a swimming pool. She informs her insurer about the pool addition. How will the underwriter likely handle this new information? A. The underwriter will cancel Anna's policy immediately due to increased risk. B. The underwriter will add an exclusion to the policy to remove liability coverage. C. The underwriter will reassess the risk and may adjust Anna's premium. D. The underwriter will require Anna to close the pool before issuing policy renewal. Answer C. The underwriter will reassess the risk and may adjust Anna's premium. Explanation. The addition of swimming pool increases the liability risk associated with the property. The underwriter will typically reassess the risk and may adjust the premium to reflect the increased exposure. Options A, B, and D are not appropriate responses. Insurers generally do not cancel policies or require pool closures, but will ensure that the risk is adequately accounted for in the premium.